Hey, thank you for your time and visit. Are you working on an assignment? Preparing for a recitation? Reviewing for an examination? Or advancing a lesson? Learn certain fundamentals of accounting for your school or business. This video about the accounting cycle and process is right for you. This is part of a series of lessons on the fundamentals of accounting. Ready to focus on our topic? The main objective of an accounting cycle is to produce business reports in the form of financial statements as a useful guide for owners in growing their businesses. The cycle consists of accounting processes involving the recording of business transactions, the classifying or grouping of recorded transactions, and the summarization of classified records into a useful format called financial statements, which contents are then to be interpreted by different users. To understand how raw financial transactions are converted into useful financial information, let's dig deep into the activities in the cycle. An accounting cycle is a series of procedures or processing steps, accomplished within the operating cycle of a business, which is normally a year. Its aim is the timely delivery of periodic financial reports. There are 8 steps in the accounting cycle, while some reading materials have more than 8. We shall focus on the major ones. The first one is all about filing and organizing business source documents, as a valid basis for recording business transactions. Proper documentation serves as evidence of objectivity, an important concept in accounting, which says, each and every transaction must be supported by solid evidence. Examples of business documents are official receipts, sales invoice, contracts, written agreements, promissory notes, deposit slip, vouchers, and many more. After organizing source documents, recording starts in the next step. The process is called journalizing, or the recognition of business transactions in the book of first entry, which is the journal book. To journalize a transaction, a journal entry in the journal book utilizes an accounting tool called account title. Examples of account titles include cash, sales, salaries expense, taxes payable, and many more. The journal book is simply a catch basin of all transactions recorded in various account titles arranged by dates, but there is no proper arrangement as to type, class, or group of accounts. As a result, any relevant information is hardly extractable from it. Example, if we want to know how much total cash or total sales does the business have to date, those information are not quickly extractable from the journal book. Let's see how the third step might help. To organize recorded transactions, each and every journal entry requires migration into another accounting book called ledger book. This process is called posting entries. This time, each account is transferred according to type, class, or group. Hence, at the end of each day, the total balance of, say, cash or sales can be determined. But, make no mistake, the ledger book is not a formal report. It is still a rugged record book, and the totals might still contain errors. To bring it to a formal and official report, we need to reach step 7. Excited? Me too. After completing the first entry in the journal book, and the second final entry in the ledger book, let's jump into the fourth step. The balancing of the trial balance. Before we proceed forward, let us have a brief recap of the 3 previous steps, from journalizing, to posting, to trial balance. Here is the trail of events, say, for cash account. The objective or purpose of a trial balance is simply to check the equality of the journalizing and posting entries, done in steps 2 and 3, which are journalizing and posting. That's right, there must be an equality. Take a look at the sample trial balance, and notice that the totals at bottom are equal or the same. The reason for the equality of the 2 totals are simple. Accounting, being an art, utilizes an accounting procedure or method called dual entry system. This very simple dual entry system causes the trial balance to balance if performed correctly. You'll learn this method in all details once you watch the lesson on journalizing and posting. And by the way, there are series of lessons in fundamentals that our lecturers have provided in this channel, enough to give you the accounting foundation you desire. Thanks for subscribing. Going back, The accounts and figures in the trial balance are all extracted from the ledger book, and are arranged in this manner. All business assets are listed first, followed by its liabilities, and the owner's capital, then revenues, and all expenses incurred during the period of the report. The trial balance is a scratchwork, not an official accounting report. What happens if the trial balance totals are not equal? Well, there are a variety of reasons, which lead you to rechecking the journal entries, or ledger entries, or both. Cool. We're halfway to the financial statements. Just 2 more steps. Let's move to step number 5, or the analysis of year-end adjustments, also known as adjusting entries. The main objective of this step is to complete or update the records or balances in the trial balance we've just seen. That is right. That trial balance is normally not yet complete at year-end when the business is required to publish its financial statements. Here are the reasons. There are certain accounts that are overstated or understated, or certain accounts that are not yet recorded. Releasing the financial statements without adjustments to these accounts would be misleading to any users, especially for established companies. Examples of accounts that might be overstated are those receivables from customers whose ability to pay has become very difficult, assets that are subject to depreciation, supplies inventory that were already consumed. Examples of accounts that might not have been recorded yet prior to the preparation of financial statements are accounts related to expenses like interest, salaries, taxes, and revenues such as service income, interest, and others. All adjustments to the affected accounts are journalized in the journal book, posted in the ledger book, and each of the final totals are forwarded to the adjusted trial balance, which is step number 6. This will be very brief since only the adjustments are needed to update the trial balance. Once more, the objective of an adjusted trial balance is simply to check whether the adjustments were properly performed according to the dual entry procedure. Nothing less, nothing more. In any case that the adjusted trial balance did not equal in total amounts, simply trace back the adjustments to the journal and ledger books. Note that both the unadjusted and adjusted trial balances are not official accounting reports. They are simply ways to check for equalities. Finally, after being satisfied with the adjusted trial balance, it will now become the basis for the preparation of the formal financial statements. Wow! Great work! We've finally come to step number 7. The preparation of the formal business report in the form of financial statements, which is the main objective of the processes in the accounting cycle. The way a business communicates is through these financial statements, which comprise of interrelated reports. Which means, one cannot be prepared without the other, or each report is dependent on another report. Let's briefly review each report and what each tries to communicate to us. This report talks about operating performance and profitability results of the business for a given period. This report talks about how much owner's net worth or capital investment has grown for a given period. This report talks about the company's financial strength and economic health as of a given period. This report talks about the different sources and uses of the company's cash for a given period. This report talks about additional information and details about the major financial reports. Are you still picking up? Ios ba ko? Just rewind a bit in case you are lost somewhere. After learning briefly what each statement communicates, let's talk about the preparation sequence of the financial statements. Which report is prepared first? And, what are their contents? It is exciting to know that there are 5 financial statements, 4 of which are major statements, and 1 is a support statement. The 4 major ones are namely, the income statement, also known as statement of operating results. This is the first financial statement that must be prepared, with the result being forwarded to the second one, which is the statement of changes in owner's equity. After which, the balance sheet, also known as the statement of financial position, will receive the result from the statement of changes in owner's equity. Then, the fourth will be the statement of cash flows, which breaks down the sources and uses of cash. Finally, to complete the set, the fifth one, which is the notes to financial statements, serves as life support to the four major financial statements. Or simply, it contains supporting computations and detailed information about the entire set. The notes to financial statements can be prepared alongside with the others. Reaching and learning this far is an accomplishment. Congratulations for that. Let's move to step number 8. The last and important step in the accounting cycle, which is the closing of income statement accounts. Remember that financial statements are normally prepared at the end of each year, and each following year will be another period or life for the business. In this case, we need to bring down to zero all income and expense accounts in the income statement of the current year. The objective is to be able to exclusively, or properly measure the income result for each particular year. Closing entries is pretty basic and simple. It is taken in another lesson along with a complete demonstration of the entire process of the accounting cycle. There you have it, folks. We have just finished presenting the entire steps in the accounting cycle. Here is a recap summary. The lesson that you have just learned is enough to get you a high score in your recitation or quiz on accounting cycle. If you need more review materials on this topic to validate your understanding, join the membership and get review questionnaires related or specific to the accounting cycle. Once a member, you will have access to other questionnaires on various lessons as well. Continue learning. We have lots of free lessons to help you master the foundation of accounting. Thank you for learning with us and see you in another accounting course lesson. Also check the description field below for links on online materials, books, exam reviewers and more. Pa alam. Bye for now.